good morning, good morning, everybody. How y'all doing? Pull on up in here. Pull up on me. Pull up on me. Pull up on me. What's going on, man? How y'all doing? How y'all doing? Give y'all a minute to file in a single file line. Everybody get it coming to a single file line. Who's going to be the line leader? Who is the line leader? Let's see who the line leader going to be. He'll learn and share was here at 7:47. Sonia is the line leader. Sonia is the first one to come in at 9 o'clock. He'll learn and share was here at 7:47 when no one was at the schoolhouse. Thomas was here at 8:42, came in with the janitorial services. Rhonda was here at 8:56, came in with the lunch lady. And Sonia was the first one here at 9 o'clock, along with Tish, who had to drop off the grandbaby at the daycare. Lump, who had to walk Dutch Rooney to get out some poopies. And then Seawalk, Mr. Darren. What's going on, everybody? How y'all doing? If you are on time, you late. Yeah, okay. Yesterday, that one yesterday. Whatever, I was setting up the live stream day before yesterday, I think. The traffic caught you. Okay. I was setting up the live stream. It was like the middle of the night sometime. And then while I'm setting the live stream, I saw that somebody had liked it. I said, I wish it showed me who liked things because I know that was here to learn and share who liked that. It was like the middle of the night sometime. I wish it showed me who liked and disliked. Hey, man, good morning, everybody. I'd like to thank you for tuning in to Tim's Tidbits. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, give you a nice hearty, but thank you for always tuning in to Tim's Tidbits. If by some small slither of my huge imagination, you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. I'm not a bull or a bear. I'm a beast. That's Big Spot if you don't hablo Espanol. And you are in tune to another episode of The Overnight Price Action Review. Thank you. You're far too kind. Hey, not going to hold y'all up today. We're going to get right into it. I even sat down just a few minutes ago and put the lines on the charts already. So y'all ain't got to sit here and watch me struggle through putting the highs and the lows on there. The only thing I got to do is draw in any other PD arrays that we want to draw attention to. And with that, let's get into it. I'm going to blow the screen up big here so we can see the candles. Hola, Valentine. Valentine, you are late. You are late, Valentine. Let's get into it, man. So here's the overnight price action review. This little box right there, that gray boxy box, that is our new day opening gap. Right. For those who may not know, the other night when we were on our Wednesday night call with the mentees, someone asked the question. It was like, hey, Tim, how did you what's that with the mentees? Somebody asked me, they was like, Tim, how did you get those gaps? How did you get those gaps? What are those? How did you get those gaps? So let's cover that. First things first. The new day opening gap and the new week opening gap is the difference between the closing price at 4:59 p.m. and the opening price at 6 p.m. the next day for a new day opening gap. And for the new week opening gap, it's the difference between the closing price at 4:59 p.m. on Friday and then 6 p.m. on Sunday. So it's the new week. It's like going from Friday to Monday for the new week opening gap and going from day to day for the new day opening gap. But it's the same thing. It's the closing price at 4:59 p.m. and then the opening price at 6 p.m. If there's a difference there, that's your new day and or new week opening gap. So if it's a gap up, like in this case it was last night we closed at 55.67 even at 4:59 p.m. and then we opened up at 55.68.50. So we have a premium gap up of 1.5 points. And that is your new day opening gap for August the 16th. That's how you find your new day and new week opening gap. Okay, so there it is. It's highlighted on the screen. And for those who may be wondering, to a Tim, what if it opens and closes in the, what if we closed at 55.68.50 and then we opened up at 55.68.50? Then you would just use the opening price at 6 p.m. The same way we use the opening price at midnight. We don't worry about a little gap down at midnight. We just use that midnight opening price because that's the important. You just use that opening price because the algorithm is going to refer back to these openings. And the reason why the new day and new week opening gap is a little more sensitive is because there's a literal gap up where price wasn't efficiently delivered. So where there's an inefficiency, the market will seek it out. Okay, now that we've beat that horse bloody, let's get into it. What's up, Deborah? What's going on? What's going on, F. Martinez? Their name is actually F. Martinez. I'm not saying that. Their name is F. Martinez. Buenos dias. Let's get it started. Let's turn my fancy dancing on. Okay, so we already said we opened up over here at 55.68.50 even. Okay, we traded down, did not take out this low at 4:45. Then we proceeded up. We have a small, yes, we do have a small BISI and volume imbalance there. So we have a BISI and a volume imbalance there on the 6 a.m. candle when we open. Right? So we push up, have a BISI and a volume imbalance there, and then we go up and set a high at 55.75.75. So our and then we finish out the 6 o'clock hour. So our initial opening range, buy side and sell side liquidity. Sell side is at 55.65.50 and buy side is at 55.75.75. A whopping range of 10.25 points from peak to trough in that first hour. Then we open up the 7 o'clock hour and we immediately take out the 6 o'clock buy side, looking to see if there's anything over there important. Nope. Take out the buy side from 6 o'clock, creating a BISI here. Come on, Tim. creating a BISI here on the 7 o'clock candle. All right, let's stretch that BISI out over here. Let's stretch that BISI out. We'll just take it to here is good. I'll leave it there for right now. All right, so we got a BISI there on the 7 o'clock candle after we take out the buy side, and then we drop down, close just below consequent encroachment of the BISI, right? And then push down, creating an inversion fair value gap. Now, question. The question is for Faith. The question is for Faith. Don't nobody else answer. Faith, why is this a low probability BISI to be buying off of? We get this displacement up. We get a nice displacement up here, and we create a BISI right there on this 7 o'clock candle. Why, Faith, why is this a low probability BISI to be buying off of? Go, Faith, go. Type it in the chat. Type it in the chat, Faith. Since you put your name up there, Faith, type it in the chat. See, this is why I like Discord, because you can unmute and talk. And I ain't got to sit here and look crazy while I'm waiting for you to type. This how I'm down here looking. I'm down here looking like this. Type it in the chat, Faith. Type it in the chat. Don't know. Faith says she don't know. E-Rock, help Faith out. Why is this a low probability BISI to buy off of? E-Rock, help Faith out. Oh, you good, Faith? No need to jalapize. E-Rock pretending like she don't hear me. Deborah, help Faith out. Why is this a low probability BISI to buy off of? Faith, I give you one more chance. This is a clue. I'm getting this Fibonacci tool and I'm running it. This Fibonacci tool is a clue. No, good try, but no. Right here, looking at the chart when it's like this. Looking at the chart when it's like that. Why is that a low because it's in the premium. Very good. That's my baby. That's my baby. I hear him back there in the back. That's my baby. Yes, it's in the premium. It's in the premium. Very good, E-Rock and Deborah. E-Rock and Deborah, very good. Coming through in the Cobra Clutch, helping Faith out. A community that studies together, butters the bread together. Yeah, man. All right, so we go up, we come down, and we invert we get an inversion fair value gap on this 8 p.m. candle there, coming into the 8 o'clock hour, right? So our sell side at 7 o'clock, hey, look at that. It lines up with the equilibrium of that range, right? The equilibrium of that range is the exact same spot as that 7:45 sell side. I mean, that 7 o'clock sales, the sell side from the 7 o'clock hour. It's the middle of the range. It's right there at equilibrium. It's right there at equilibrium, and then of the range. All right. So then we come back down to the very first BISI that was created on the session. Let's come here. Fair value gap, first of session, bullish. So that's the very first fair value gap right there, and volume imbalance of the session, right? That's the first one of the 6 o'clock session right there. We traded back down to it on right at the 8 o'clock candle. Came down, touched the high of it, right at the opening of 8 o'clock. You know what I just noticed? I put in all the sell sides and I only put in one buy side. Got to be more careful. Got to be more careful. I only put in one buy side. I thought I was doing something. I said, boy, I done put my chart up here. Y'all ain't got to wait on me to draw these lines. I'm doing something. I'm pooping in the tall cotton. I ain't did nothing. Nah. It's 10 o'clock candle. It's 10. Ain't did nothing. Can't tell me nothing. Can't tell me nothing. 10, 11. Can't tell me nothing. Okay, so the midnight open. All right, so the midnight open and the 12 a.m. high, same. Okay. All right. Okay. Thought I was doing something. Thought I was doing something. Yeah. Thought I was doing something. Thought I was doing something. Thought I was doing something. Oakley Dokley. Now we cooking with Crisco. We cooking with Crisco. I said now we cooking with Crisco. We cooking with Crisco. So where were we? Oh, we came back down to the first Bissy that was created in the 6 p.m. session, traded down into the new day opening gap. Overshot it just a little bit here on this 8:30 candle. And then we wicked back off. It did not take out the sell side, the initial sell side. So, Faith, what did we create here when we did not take out this initial sell side? What was created right there? Right? Faith, what was oh, get out the way, Tim. What was created right there when we did not, on this 8:30 candle, we came down, did not take out this sell side that was set, the initial sell side? What was created right there? Right? We went up, made a high during the 7 o'clock hour. Then we came down during the 8 o'clock hour, and we did not take out the initial sell side. Initial sell side, right? And we created this dealing range right here. This is our current dealing range for the Asian session thus far. That's our current dealing range, right? Remember we said the 7 p.m. swing low was faith, 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 not Carino, faith. What did we create right here, Faith? What did we create over here? Well, we did not take out that sell side from the dealing range, our opening range, our not opening range, but our dealing range thus far. Okay, Carino. Why you put the Pinocchio up there, Faith? Yes, we made relative equal lows. We created relative equal lows. So we during the Asian session, we have established our range from the 6 o'clock hour up until the 7 o'clock hour. So the 6 o'clock hour and the 7 o'clock hour created our range, right? That's our dealing range that it created, right? And so as we start to pull back and we set this low, now we know that our range is established. This is our low, this is our high, right? We was watching this as our initial buy side because we had gone up and start to pull back, right? Start to pull back and created a swing high. But we didn't start to retrace into the range. We just continued to make a high. So we made another high there. And then we start to pull back into the range, right? And we pulled back into the range. We see that this 7 o'clock low ended up being the equilibrium of this entire range. So we've gone up, set a high, and pulled back to equilibrium fair value, right? Letting us know, okay, yeah, this is our range right here. Okay, we come to that range. I forgot to note that SIBI that we made right there when I was talking about the inversion fair value gap. I forgot to note that SIBI. I'll note it in a minute. Well, I'll note it right now, right? We got that SIBI there on the 730 candle. Right. So we got that SIBI there on the 730 candle. And when we open up here on the 8 o'clock candle, we push up and touch the low of that SIBI, failed to get to consequent encroachment of this is not quite an inversion fair value gap yet, because it don't become an inversion fair value gap until this candle closed. But we got on the bottom side of this soon to be inversion fair value gap and touched the low of this 730 BSI. Then we dropped down and touched the high of the very first imbalance that was created. And this right here is the BSI that's in the discount of this move. This one, this BSI up here at 7 p.m., that one is low probability to be buying off of because it's in the premium of our range. And then we come back down to the first one that we created, which is in a discount of our range. And we came back down to the new day opening gap. And we came back down to this bullish order block right here. Bodies of the candles respecting consequent encroachment of the new day opening gap, right? Respecting the mean threshold of the last down close candle inside this 2 candle order block over here. And we created relative equal lows. Now that our range has been established, we have a buy side, we have a relative equal lows, right? Now, this is where you can start making your decisions. Do you want to look for clues to attack the buy side and then look for clues to attack the relative equal lows? Or do you want to wait for price to attack the buy side, then look for clues to give you opportunity to attack the relative equal lows? Or wait for the market to attack the relative equal lows and then look for clues to attack the buy side? This is when you can start to make your decisions as to how do I want to engage with le market. Okay, so in this case, what did the market do? The market used the new day opening gap, the bullish order block, and the first BISI that was created in the session as support and made its way up to attack the buy side. Now, let's dig deeper into that move. Why do I keep looking over here? I need to look over here. I'm looking over there at y'all. Right? So, after we came back down to the new day opening gap, respect the order block. So, if you was waiting on this right here to play out, everybody be saying, Tim, how do I get into entries? It depends on what PD array you use, right? You have a fair value gap, right? You got a fair value gap. You have an order block. You have the new day opening gap. There's 3 different ways where we displaced away and retrace back into an anticipated area of support. You choose your area of support where you want to get involved, and there's your entry there. If this is your entry time frame, there's your entry. There's your entry. There's your entry. If this is not your entry time frame, once we come back and engage with it, you go to your entry time frame and look for your setup. Okay, so we come back to the new day opening gap. First fair value gap created, bullish order block from 4:45 p.m. We stay there for an additional 30 minutes, right? 2 more, stay there for an additional 30 minutes, coming to the 9 o'clock hour, and then we displace away, right? We displace away, coming above these little equal highs there into the inversion fair value gap, into that SIBI, right? Remember that 730 SIBI pushed into that, and on that displacement up, we created Einmal BISI at the 915 candle. We created a BISI at the 915 candle. Okay. And then at 9:45, we traded back down to the low of that BISI, right? Touching the wick of this bullish order block from 9 p.m. And then we displaced away again, trading all the way back up above the 9 p.m. high, right? When we came up to that SIBI last time, we came above the 8 p.m. high, right? Traded back above the 9 p.m. high, above the buy side, above the 9 p.m. high. Nice strong rejection off of it. Popped up there. Look, did we hit this order block? I mean, this rejection block. We did not poke into the rejection block, but we came up here to the bodies, came up there even with the bodies. So now from these bodies, this high at 10 and 11, all of this are smooth highs, right? We got these nice even bodies and we got these nice even wicks. So we got some smooth highs resting right up there, right? Let's put that on there. We're going to come right here. We're going to go smooth. Smooth highs. Okay, dope. We got us some nice smooth highs right here. right there. Got some nice smooth highs, right? From these bodies there to the 10 o'clock high and 11 o'clock high. Nice smooth highs, okay? Then once we set them nice smooth highs, we come back down, right? Trade back down, get below that SIBI again, get back below that BISI again, right? Below the SIBI again, back below the BISI again, come down and drop below the 10 p.m. sell side, right? Drop below the 10 p.m. sell side, but we don't take out the low that's inside this fair value gap, creating, what are we creating here? What are we creating there? Relative equal lows, right? So now this time we got relative equal lows and we have smooth highs, right? So we got relative equal lows and smooth highs at this point right here, right? If I was a gambling man and I could not see the future, right? Let's put one more candle on there. Right? If I was a gambling man and I could not see the future, right? At this point right here, I'm more keen to be looking to take out the buy side up here from our range than to be coming back down into these relative equal lows right here. And why is that? Because when we set our range, we pull back down into an anticipatory reactionary point, right? Once we reach that anticipatory reactionary point, the draw is there, right? Once we get there and we get our confirmation to go long, Picasso lives right there. We came up here very near Picasso and set smooth highs, right? Retrace back down into this range here, right? Retrace back down to this range here, right? So in the sense of price moving in a trending direction, what do? We go external to internal, right? We push up. We don't break out into like an external range, right? But inside this entire move, we have 1, 2 swing lows in there. So there's internal liquidity inside this move. So only thing we did was come back, right? After midnight, a new day, right? A new day, and we come down and we sweep liquidity. What do we say price likes to do going into a new day, a new session, a new hour, a new minute? It likes to, hey, thank you, Kashaya. The market is open, the market is open, the market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amount of notes so you can go back and study what you saw today and apply it to your future trade endeavors. Enjoy your day. Thank you for tuning in to another episode of where's my picture? The overnight price action review. Now, enjoy your day. Now, let's get back into it. All right. So we just came back down and swept liquidity. Right. So that's why I say if I was a gambling man and couldn't see the future, I would be more inclined to reach for the buy side because this move has not reached its terminus and we're just pulling back and taking out liquidity after the midnight open. We opened at midnight here, traded down, took out liquidity, right? did not take this liquidity there, because that would have been a bearish break in market structure. And so that's why I would be still targeting the buy side from our range. Now, moving right along. So we, on the move down, we created a SIBI. Created a SIBI here on the 12 a.m. candle, right? And so since we're just anticipating this to be a liquidity grab, taking out the 11 p.m. low and the 10 p.m. low, right? Coming down, failing to touch this 915 BISI, failing to take out the sell side, resting below the 945 candle. So now we're anticipating this to become an inversion fair value gap, right? And what do we get right here on the 1 a.m. candle? We push up above it and create an inversion fair value gap. Then the 115 candle gaps down at the high of the inversion fair value gap, dips in it, its toe in a little bit, and then displaces away, taking out the smooth highs and the buy side liquidity high resting above the 715 candle. Right. Once we took out the buy side liquidity, we set the London high on the 245 candle, and then we dropped it like it's hot, all the way up into 345, coming down below the midnight open, and just dipping down into the little liquidity below the bodies of the 12 a.m. candle. Did not get down to the relative equal lows, pushed back up into the range, did not hit the 3 a.m. SIBI, right? Did not get back to the 3 a.m. SIBI, but we did trade back up to the volume imbalance between the 330 and 345 candles, right? The bodies of the candles are respecting the volume imbalance. We wicked up. We did wick up, did not make it to the SIBI, but we did come to this inversion fair value gap right there, touched the low of the inversion fair value gap that was created as we broke through the buy side. So anytime you have displacement and you have a fair value gap that's right there at the buy side or the sell side, that fair value gap should be a strong one to buy off of or sell off of. If that fair value gap fails, you can anticipate a further pullback or retracement. And right here, we have a BISI that was created on the 130 candle that's in line with the break of structure. So when we inverted that BISI, when this BISI became an inversion fair value gap, I was about to say SIB because I got it red. When that BISI became an inversion fair value gap, right? 315 candle traded up into it, right around consequent encroachment of it, right there, as you see, traded up into consequent encroachment of it. That's when we dropped down, came down into this 1 a.m. BISI and this 12 a.m. inversion fair value gap, drop below consequent encroachment, wick back up, open up again, dip down one more time, right? Set some relative equal lows there. Equal lows exactly, right? Set some equal lows, wick back up again, right? Drop down again below the equal lows. That's when we came down below the bodies of these candles there, right? Went back up again. This time we got to the volume imbalance between the 330 and 315 candle. We went back up to that inversion fair value gap that we talked about, stopped at the low to the tick, right? Traded back off bodies of the candle, respecting the volume imbalance between 330 and 345. Open up again, wicked up to look like roughly consequent encroachment of that wick. Yep, boom, wicked up the consequent encroachment of that wick there. The high on that candle is 55.77.75, and the consequent encroachment of that wick is 55.77.75. So when the consequent encroachment of that wick dropped it like it's hot, coming down below the 12 a.m. The sell side from the 12 a.m. hour, right? Wick back up, pushed up, immediate rebalance off of this 430 candle, drop down below the relative equal lows, creating a London low right there where we touched the high of the very first fair value gap that was created during the overnight session. Stop there at the high. Nice rejection off of it, pulled back up to the midnight price, the midnight opening price on this 515 candle, came all the way back up to the midnight price, and then dropped it like it's hot, taking out the initial relative equal lows. So remember when I said here, once we established this range, we made a high, and then we established these relative equal lows. Remember I said you now can wait to see if you're going to wait for price to engage with the high and then find a way to attack the lows, or you can wait for price to attack the lows, then find a way to attack the highs, or you can wait for clues to see if we're going to start going toward the highs and find a way to engage with the highs, or wait to see if we're going to engage with the lows and find a way to engage with the lows. In this case, the algorithm set the range, attacked the highs, and then came back and took out the lows. And that is your overnight price action. Yeah. Hey, man, that's all I got. Hopefully this was helpful to somebody. Y'all got anything for me? Do you got anything for me? Do you got anything for me? Anything for me? Hey, Kashaya, what's this dissertation you done put over here? You know my reading don't be reading in the morning? Do you have time to go over yesterday's price action from market open to 12? Price never traded back into the fair value gap of 830 news. At what point do you just start trading with the trend? Well, that's a question totally up to you. For me, I put it like this, right? Thank you, Here to Learn and Share. This is a question that only you as a trader can answer. There's no magic wand to this here, right? So you have to decide as a trader, is it worth the risk for me? Right? Now, let's look at yesterday's price action. Okay, and then I'll explain what I'm talking about. Well, I explain it as I go along. Don't need this junk anymore. Get out of there. Right? So, looking at yesterday's price action, murderer. Let's take all this junk off the screen. Thursday at 9:30 a.m. Boom. This is yesterday as the market is getting ready to open, right? It's 9:29 a.m. on Thursday, right? So we see, where are we? Kashaya, I want you to talk to me. So I'm going to put a link in the chat, and I want you to click it and talk, because I want to interact with you. And I do not want to hear, oh, Tim, I can't talk right now. because I don't feel like waiting for to look for the answers. Click that link and pull up so that you can respond verbally to me. You don't have to put your face on the camera. You don't have to just click in, keep your camera off, and then so I can hear you talk. 1 second. One. Your second is up. So premium. We are in a premium, right? So if you see here, let's mark out some key points. وياك شايم. There you go.
Oh, wait, you can hear me?
Yes, I hear you.
Okay.
So we're looking at the charts. I'm just marking some key levels, right? Marking out key levels so we can get our minds together. Get our minds together, baby. Yeah, 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 yeah. Yeah, 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 yeah. Bottom, 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 bottom. London high, high on the top. London, da, 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 da. Okay. So I just want to mark out some key levels here. So we opened up. Mark this. Kashai, you in there twice. What happened? Did you have to leave?
On your, what's it called?
Okay.
The stream. So I just joined on my tablet. So it's bigger.
Oh, okay. So you want me to take the other one off?
No, I just left.
Okay. All right. All right. Okay. So. All right. So key levels are marked. Now, at some point, you have to decide. Well, at any point, you have to decide: is it worth the risk for me? Let me go full screen. They don't need to see us on the side. You got to decide: is it worth the risk for me? Right. So now, looking at what price has done now, you see that we opened up, right? We opened up. We here at, let's find the opening price. All right. So that's our opening price. 6 p.m. open. All right, that's our opening price right there. So that's our 6 p.m. open. Make these bigger. Trying to keep everything in the screen. That candle is crazy. All right, so hopefully everybody can see that relatively well. All right, well, we're just gonna push this out the screen for now because we know that that's crazy. Okay, so this is our 6 p.m. open, right? We came down, established a low, came up, established a high, right? And then we traded back into the range, came back up, right? We got smooth highs, never really taking the high out. Yes, we just creating smooth, keep creating smooth highs, come down, and then we take out the sell side. So we attack the sell side, reject off of it, right? Then that points us up here. We poke above, trade back into, that's not a really good dig. This is not a really good dig for all of this, just to poke above that a little bit. So we're anticipating it to go higher, right? Now we see when we come into the 930, we see that the news has pushed us all the way up here, right? This is the news candle there, and off of the news we've gone up to there. Okay, since the news candle we've gone up to there, right? So we see we got this huge BISI right there, right? Let's put another candle on. Okay, and then I can't go to regular trading hours, but we know that we opened here, and then yesterday at 4:15 we closed there. Okay, so now this right here is our opening range gap, right? So we got a huge opening range gap, huge opening range gap. Okay, and we got this huge BISI from the news candle. Right now we're looking here and we know that the price is down there, so we just zooming in here, right? We know price is down there, we know this is our opening range, and we look here, right, before the 930 open, we see that we are respecting this, let's get it right, Tim, BISI, right? We see that we're respecting this BISI, and we've gone up, taken our buy side and wicked off of it. Okay, so we've gone up here, taken out buy side and wicked off of it. So this right here, thus far, is the low of the 9 o'clock hour, right? Thus far is the low of the 9 o'clock hour. So thus far, that's the low of the 9 o'clock hour, and this is the high of the 9 o'clock hour thus far. Okay. All right. So that's the low, that's the high of the 9 o'clock hour. This is the low of the 9 o'clock hour. Thus far, we wicked up, came back down, and now the time is 9:45. Okay. Then we poke above again. Now we're going into 10 o'clock now. Now it's 10 o'clock, and we before the 9 o'clock hour started, we traded down into this 8:45 BISI. Right after 9 o'clock, we opened up at 9 and we created the BISI, and then at 9 during the 9:15 candle, we came down and we traded into the BISI, respecting consequent encroachment, and got up off of it, still showing bullishness. Right then we come up and took out this high and rejected off of it. So now we're watching to see if we come back down into this BISI. Right, we didn't come back down into the BISI, and we pushed up and we took out the high again, closing very near the high. Right, so now at this point here, this is when you have to decide, am I willing to engage with the longs, right? Because we're in an extreme premium, right? I can't answer that for you. Nobody can answer this for you as a trader. Only you can answer this. You have to say, am I willing to? And I see that the market is showing me that it doesn't want to come down, but it's still not showing me that it wants to go up. Right. And so you decide, am I willing to engage with these long setups that I'm seeing? Because the market is showing me here, right? It's respecting this BISI and it's taking out buy side, right? It's not coming back and taking out the sell side. So on some lower time frame, we've moved from external to internal and moved back up because we went up, came down, went up. So on some lower time frame, we're moving from external to internal, external to internal, external. We're still moving up on a lower time frame because this time frame, yes, we're not doing much. We're not like blasting off, but the candles are moving up because we're taking out high. We took a high here, we took a high here, we took a high here. So price is moving up, right? So this is when you decide, do I want to engage with this continued crawl up, or do I want to wait to see if price wants to break down, right? Because you don't want to try to pick the top. You don't want to just say, okay, I'm just going to sell this going far enough. You don't want to try to pick the top. And when price is this extended, right? When price is this extended, then you need some kind of major shift to say, okay, I'm ready to come back down, right? So nothing has happened thus far to make you want to say, okay, we're coming down, so I want to short. So all you can do is just sit there and wait to see, am I willing to take the risk of going long? Okay. So we come here, we pop down, we still don't take out. This is the 10 o'clock hour. We still don't take out that sell side below the 9 o'clock hour, right? We still respecting the down close candle here, right? And we still taking out highs, right? We took another high out. Okay. We take out another high, right? Still respecting the down close candles, right? Did not take out that low, did not take out. We still got that sell side from the 9 o'clock hour. So you don't have any confirmation for anything to come down, but you still got to decide, am I willing to pay this premium to keep going up? Because you're paying a premium now, right? And nobody can decide that for you, because you can say, okay, I want to trade it and go at hey, it's up to you. It's your money. You can pay a premium if you really want it. It's all about supply and demand, right? You understand what I'm saying?
Yeah. So for the major shift to have happened, would it had to trade past the original BISI or any of those down close candles to be a market structure, a break in market structure?
Okay, so you asked a couple of different things. So for a break in market structure, right, on the 15-minute here, you would need to take out this. At this point, you would need to take out this low for a bearish break in market structure, because this low here is pushing up. That's the parent low, right, for this move coming up that took out the buy side, right? So coming down below that would be a bearish break in market structure, right, for the overall move there. Okay, because this low here now is just internal liquidity for the overall move. Okay, and then if we start to disrespect down close candles, that's a sign of possible weakness, but it needs other confluence to be a really good sign of, okay, we're selling off. It just means, because in a buy program, the down close candles should be respected, right? But when you start to build out liquidity, it can push past a down close candle to come take some liquidity as rocket fuel. You see what I'm saying? So as you start to build in lows or build in, like, i.e., like I'm using air quote support, right? When you start to build in support, then the market can come down and sweep that just to use it as rocket fuel. So you want to look for key lows that says, okay, this is a true break, right? This is a true break, or right there at this point, that'll be the point where for the 15-minute, like, yeah, that's a breaking market structure. And then the next one is like way down here. You see what I'm saying? Because this right here is the overall move. Come here. This low right here is the entire move. You see what I'm saying? That's got us in the premium right now, right? But this is the low right now that the market is respecting. So that right there will be the break there. That would be the breaking market structure there at this point to let you know, okay, we are bearish and we may slide back down into this on the 15-minute. You see what I'm saying?
Yeah, that makes sense. Thank you.
All right. And then, yeah, and and as it go along, like you say, it never, and see it's still going. And now we're at like 1045. And for me personally, if I get all the way over here to 1045 and it was too rich for me to participate back here, it's definitely too rich for me to participate now. You see what I'm saying? Because
Okay.
now I feel like I'm chasing. And I'm just gonna say, okay, it could just go up all day. I ain't messing with it because I see that we're in, but this is an individual thing where some people be like, I want to make some money. I see it's a trend day. I'm going to get involved and I'm willing to pay the premium. I'm willing to take the risk. Right. But for me, I just like to buy in a discount. You see what I'm saying? And if it's not giving me what I want, I just rather sit on the sideline. Was that
Okay.
helpful at
Thank
all?
you. Yes, it was. I took notes, so that's why I'm silent. But thank you.
No, that was cool. I just want to make sure it makes sense because a lot of times we have questions that don't really have an exact answer. So I just try to explain the thought process behind everything and let you come up with something in you that makes sense in your mind. You know what I'm saying?
Yeah.
Because there's no one answer for trading. Everybody's gonna interact with the charts differently. You see what I'm saying? Everybody gonna interact with the charts differently.
Yeah. It's just the reading of it. Like you read it very well, and I'm trying to get to that level. So I'm slowly like taking in all the notes so I can get to that point.
Yeah. Because that's where it starts. It starts with having an understanding of where price can draw to. And when you have an understanding of where price can draw to, then um that's when you have an opportunity to make like educated entries where, like I say, like when price just keeps going up, it's not giving me what I want. So I'm just guessing at, okay, if I get in, will it keep going? But when price is like moving and trade, just like where price is here, right? So I can look at this right here and say, okay, we've gone up and we've pulled back to there, and now we're trading back up, right? So I can say if I want to participate in this, like I got a SIBI here, right? I got a SIBI here. I have a SIBI and a volume imbalance here. Where's my right there? Right. So I got a SIBI and a volume imbalance there. Right. So if I believe price is going to slide down, right? I say, okay, I think price is going to slide down now because we're very high in a premium, right? Prices come here. I think it's going to go down. Right now, I have an educated way of managing my risk, right? I can say, all right, I want to be a part of it. I just want to be a part of the move. So I'm going to go short here, but I know I have to allow for price to come back here, right? And so if I get in here, I can say, okay, I'm going to risk it to above this fair value gap, because if we go above this fair value gap, I think we're going to take that high and I want to get out of the trade. right? I got a educated plan way where I can just take, or I can say, okay, I'm going to just give it to the bearish order block right there, because that's in line with the consequent encroachment. I'm gonna go just above the bearish order block, so I go at the high of the volume imbalance, right? I wouldn't personally do that because I'm giving price a chance to touch all the inefficiencies, right? Or you could say, oh, my risk to reward allow me to go to that high. I have an educated place where I can put my stop with managed risk to say I believe price is going to go down. Not saying that I'm right, not saying that I'm wrong, but I got an educated place where I can put my stop to know this is how much money I'm risking to make this amount of money. But when it's just running, if I get in here, where do I put my stop? You know what I'm saying? Because it's just running. You know what I'm saying? If I get in there, where do I put my stop? Do I put my stop here? Do I put my stop there? Do I put my stop there? In this case, if I just got in here because I'm chasing it, I put my stop there, I'm stopped out. God dog it, I should have used that one. Put my stop there, I'm stopped out. God dog it, I should have used that. I got stopped out. You see what I'm saying? Like, where do I put my stop when I'm just chasing the price? Because I don't know when it's going to decide to retrace back into this huge range. You see what I'm saying? The risk far outweighs the reward because I don't know where it's going to. I have nothing to shoot for. You see what I'm saying?
Yeah, that makes sense. And then
Yeah.
that's when you start spiraling, because that's what happens to me.
Yeah. Yeah. You spiral. And it's like, and then it's crazy because like when price is like moving, right? When price is moving algorithmically, right? You don't need the whole plate. Right? Because, for example, I was just talking about this as I was talking, right? Let's just say if somebody was looking to get in, right, at consequent encroachment of this fair value gap, right? Yep, right now it was like you have went down like at least 6 points into the trade already, right? If you was a person that was looking for 5 points on the ES, you would be out of your trade already. You see what I'm saying? If you was somebody looking for 10 points on the ES, you would be halfway there, right? You'll be halfway there. Could possibly be done locked in like some profits at break even, but 10 points would put you right down here close to this possible volume imbalance right there, right? But that's a decent move for a intraday scalp. You know what I'm saying? And that's just looking at the 15-minute time frame. If we go down to a 1 minute, right? If we go down to a 1 minute there, right? You can see that, okay, if you thought it was going to go down there, right, you could target that low right there, right? But if I'm looking at this right here on the 1 minute, right, remember when I talk about going to your entry time frame, right? So if you just don't go short off of the 15-minute time frame, right? So when you come down to the 1 minute and you look at, you say, okay, I've interacted with the 15-minute here on this 10:02 candle, right? So once you interact with the 15-minute on the 10:02 candle, now what you want to see on your entry, what I want to see on my entry time frame, right? I have this BISI right here, right? I want to see that BISI fail. You see what I'm saying? So, right, for me to enter this, because if I'm not just going to go short off the 15-minute fair value gap, right now, once we get to my entry time frame, right, I have this BISI here. We blast off and we touch that. So now I want to see, and we've gone up above, right? We've gone up above these highs here, traded up into that fair value gap there, right? We traded up into that fair value gap there, and then now we're wicking down, right? So that's looking good, but I need the confirmation. So now on the 1 minute time frame, I want to see this BISI fail and we take out that low, right? So if that BISI fail and we take out that low, I will want to see some type of imbalance here while we got this inversion fair value gap, right? So I want some type of SIBI, right, over here in this price leg, right? I want some type of SIBI over here in this price leg, right? So that'll give me, right, if we displace down, giving me a SIBI over here. That'll give me that'll give me a bearish order block over here. God dog it. That'll give me a bearish order block over here. That'll give me an inversion fair value gap, and it'll give me a bearish fair value gap with a breaking market structure, right? And preferably the bearish fair value gap would be down here, right? You want the bearish fair value gap to be at or before the break. What? When I say before, meaning as price coming back up, you want it to be at or before the breaking market structure. I don't like when the fair value gap is up inside this right here, because the fair value gap is now inside of the balanced price range. You see what I'm saying? I want the fair value gap to be outside of the balanced price range, like right at the breaking market structure. You see what I'm saying? I don't want the price to have to dig back up inside the balanced price range to get to the fair value gap that I want to short off of or go long off of. Right. So that's now that we're here, see, like, for people who don't want to play the lower time frames, ain't nothing wrong with just getting short when it comes back to your higher time frame area, right? Because you already established the risk that you're willing to take. You see what I'm saying? But for me, I want to look for the confirmation on my entry time frame, right? I want to look for the confirmation on my entry time frame. One, because if it do work out in my favor, I don't want to sit through all of this, right? Because we hit it at 10:02 and now here is at 10:13 and it ain't doing nothing. We just do, and you know what I'm saying? And now we're just sitting here. If we went in at consequent encroachment, right, then we sitting here at 5 points. That's the high, right? So we sitting here at about 4.5 points of profit. If we went in at the low, we're sitting here at 3 points in profit, and we've been in this trade for over 10 minutes. You see what I'm saying? It's like, and it ain't doing nothing. It ain't moving. We're sitting there looking like, oh my God, what did I do? Right. But that's just one of them things where when you enter in all based off the higher time frames, sometimes you just got to sit in the trades longer and watch them chop. But that's neither here nor there. I'm just running my mouth. But the real reason why I dropped down is because, you know what I'm saying, you're looking for something like that on your entry time frame where you've interacted with your anticipatory reactionary point. We've come up, interacted. Now you want to see the breakdown. Got our breaking market structure there, right? That's a significant level because price came up here, displaced away, and now we're trading back below it. So that would be like a Judas swing, up then down. You see what I'm saying? We got a Judas swing there, right? And then giving us a bearish breaker there. If we got a SIBI there, now we got an inversion fair value gap there. Okay. So that's all the stuff the confirmation you're looking for on the entry time frame. Now, could it be well, I ain't got no actual what's the name to look at right now, no structure to look at now, but just looking at based off the 15-minute time frame. We're just gonna say entering right at the gap, right at the touch of the gap on the 15-minute, and then we're giving it to the high, right? Because we always want to go with the high, right? Yeah, so that's the high of the, yes, that's the high right there of the leg that the fair value gap is in, right? So that's a 10-point stop, and we're just gonna put it to the low. Not saying we're shooting for the low in every trade, but we're just putting it there. And then we go to the 1 minute, right? And then we don't have a setup yet on the 1 minute, so we don't have anything to look for. But let's just, for all intents and purposes, we're gonna go in. See, we still don't have anything yet, but let's just say on the 1 minute, right? So price comes down here. Say we push back up to the high of this fair. Well, let's just say we push all the way, come down. Let's say we go all the way up to this fair value gap there, right? And then we come back down and take out that low right there. Okay, so we come back down and take out that low there. Let's do it like this. Doot, 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 doot. That's how we're gonna do it right there. Okay, and then we're gonna God dog it too. All right, so doot, we're gonna go back up to there. Doot. I can't remember what I drew now. Go there, come up to there, go there, there, hit the high, come down here, 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 like that. That's how we're gonna do it. All right. Give extra we give it extra confirmation today. Then we're gonna come over here, put us a Sibby right there. All right. So now we're coming in here and we're coming to that high right there. We'll come back down to the same. Oh my God. All right. So over here, just based off the 15-minute, it's a 10-point stop with a 3-to-1 risk to reward, right? And then over here, coming off of our fake little structure, it's a 6 3/4 stop with a 3.5 risk to reward, right? Based off, you know what I'm saying? And that's why I do it off the 1 minute, because a lot of times you can get a better risk to reward, right? You can get a better risk to reward, or you can get you can get like a tighter stop. But not only that, it gives you more confirmation of that the market really wants to turn around. You know what I'm saying? Whereas when you're just looking at it on the 15-minute, right? You're saying, okay, yeah, there's a high probability that it's going to turn around here, right? But you don't know if it's going to turn around. Whereas when you let it get there and then you wait for the lower time frame to confirm that it wants to turn around, right? It's a higher probability entry. You get what I'm saying?
Yeah, I do. I'm taking notes.
All right. Anything else?
From me, no. I have to rewatch this video, but no other questions for now.
I got something for you. Why you be quiet on Wednesday and Sunday nights when it's minty time, and then when we out here on Al Gore's internet with the world, you want to come out here asking all these hard-hitting questions?
That's not true. I don't think so. I've been asking questions. Well, since I've joined, I'll say that. I've been asking questions.
All right. Okay. All right. I'll take you at your word. All right. I appreciate it, man. That's all I got, y'all. That's all I got. Very helpful. Yep. You're welcome. All right, man. All right, Kashaya. Thank you.
Thank you, Tim.
Yep. Look here, learn shit. She asked questions. Ain't nobody asked you nothing. Hey, hey, man, I appreciate y'all for hanging out with me. I appreciate Kashaya for pulling up with the hard-hitting question. Hey, man, if you're gonna trade today, please trade safe. Deborah says she appreciates you for asking these questions, Kashaya. If you're gonna trade, man, please trade safe. If you're not gonna trade, do like Kashaya. Take notes. She said, hey, I'm taking notes. That's why I'm quiet. I'm taking notes. Take notes. And when you take those notes, go back and study. You see this right here? This is my little book. Right? Go back and study the things that you wrote down so you can apply it to your future trading endeavors. See my little the back here is my ICT notes, right? ICT live streams, ICT these price action notes, ICT live streams 2023, ICT live streams 2024. Go back and study your notes so you can apply it to your future trading endeavors, man. Hey, until the next time I decide to get on Al Gore's internet and discuss these things we call price action. Y'all be safe out here in these trading streets. Remember, it's your boy Aranya Grande, aka Big Spider. If you don't hablo en español, I'm gone, man.